What happens when military strikes halfway around the world instantly vaporize nearly $1 billion from crypto markets? The answer reveals just how fragile digital assets can be when geopolitical chaos erupts. In this video, we will uncover how a major military operation triggered unprecedented cryptocurrency volatility, wiping out leveraged traders and sending Bitcoin crashing below a critical level for the first time in over a month. You will discover which cryptocurrencies suffered the worst damage and why global tensions continue to pose serious threats to your digital investments. The chaos began with Operation Midnight Hammer, a massive United States military strike targeting Iranian nuclear facilities. B-2 stealth bombers unleashed devastating 30,000-pound bunker-busting bombs on 3 strategic sites: Fordow, Natanz, and Isfahan. Submarine-launched Tomahawk missiles joined the assault, aiming to cripple Iran's nuclear enrichment program. President Trump called it a spectacular military success, claiming the facilities were completely obliterated. But here is where things get interesting. While bombs were falling in Iran, financial markets thousands of miles away began hemorrhaging money. The cryptocurrency sector experienced immediate and brutal volatility that caught even seasoned traders off guard. Within just 24 hours, liquidations surpassed $949 million. Think about that number for a moment. Nearly $1 billion wiped out in a single day. Highly leveraged long positions bore the worst of this carnage, as traders who bet big on crypto's continued rise found themselves facing margin calls and forced liquidations. Bitcoin, the king of cryptocurrencies, crashed below the psychologically crucial $100,000 mark for the first time in over a month. The 4% decline to $99,300 was not just numbers on a screen. It represented a seismic shift in market sentiment that rippled through the entire ecosystem. Ethereum suffered even more devastating damage, plummeting nearly 10% to trade below $2,300. Some exchanges reported dips as low as $2,240, with technical analysts warning that multi-month lows around $2,200 could be next if the selling pressure continues. The bloodbath extended far beyond major cryptocurrencies. Altcoins across the board took massive hits, with Ripple, Solana, and Dogecoin all tumbling to multi-month lows. The broader crypto market capitalization fell approximately 7%, showcasing just how sensitive digital assets remain to geopolitical shocks. This vulnerability stems from cryptocurrencies being treated as risk assets during uncertain times, causing investors to flee toward traditional safe havens like gold and government bonds. Iran's response only made matters worse. Foreign Minister Abbas Araghchi issued ominous warnings about everlasting consequences, while the likelihood of closing the strategic Strait of Hormuz jumped to 46%. This critical shipping lane handles massive amounts of global oil traffic, meaning any disruption could trigger worldwide economic chaos. This event perfectly demonstrates how quickly global tensions translate into financial market turmoil. As military actions continue and potential retaliation looms, crypto markets remain on edge, bracing for whatever comes next. The intersection of geopolitics and cryptocurrency has never been more apparent or more dangerous for investors. Subscribe to stay updated on how world events continue reshaping the digital asset landscape and what it means for your investments.